and you can claim it per student. So say you have like, I don't know, quintuplets and they all go to college at the same time. Well, you can get that credit for every single one of them while they're in college. Now, the thing that's neat about this credit is up to 40% of it is refundable.
Hi, I'm Bette Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance-related news. Come learn how to grow and keep your wealth.
And on this Tax Tip Tuesday, we're going to talk about some of the benefits that you can get when you've got kids in school, and possibly if you yourself are going back to school. And by school, I really mean college. This is higher education tax benefits, right? Tax credits, which I mentioned a couple in another video. There's some other kind of neat things you can do to pay for college in a tax advantaged way. So let's start with the credits. I mentioned this on my previous video about tax credits, but the two big ones that we're looking at for college is the American Opportunity Tax Credit and the Lifetime Learning Credit. So if you've got a child or you yourself are paying your own taxes and for the first time going to college, right? Not high school, afterward, going to college, you can take advantage of the American Opportunity Credit, right? And now it's not going to cover everything, and college is very expensive, but hey, it helps, right? So that American Opportunity Credit, it's based on 100% of the first $2,000 of qualifying college expenses and 25% of the next $2,000. So the possible credit is $2,500 per student. The thing that you got to worry about here is that there is a phase out. And I've talked about phase out before. What that means is when your income hits a certain level, you start losing some of the credit, which I know it stinks, but that's unfortunately how these credits are designed by the government. So if you don't like it, write to your congressperson. And you can claim it per student. So say you have like, I don't know, quintuplets and they all go to college at the same time. Well, you can get that credit for every single one of them while they're in college. Now, the thing that's neat about this credit is up to 40% of it is refundable. What does that mean? If the credit causes you to actually owe so little in taxes that you would be getting a refund, you can have it do that for up to 40% of the credit. So that's really fantastic. Now, the other credit, the Lifetime Learning Credit, this one is generally used after you've used up the American Opportunity Credit. So it's up to $2,000 per return based on 20% of up to $10,000 of qualifying higher education expenses, which anyone who's got kids in college, I'm sure you have seen 10,000 happens really quickly. So it's not a huge amount again, but better than nothing if you're going back to school. And there is a income limit for this one, unfortunately, as well. Now, the thing to really understand with these two credits, that you can't claim them both at the same time in the same year for the same student, right? So you do one then the other. Generally, undergrad for the first time, American Opportunity, it's a bit more. And then after that, first 4 years, anything else you do after that, lifetime learning. Now, if you're looking at some older years of tax returns, or maybe it's not the first time you have one of your kids in college, you might remember there was a tuition and fees deduction. Unfortunately, that one has ended. So you cannot take that as of your 2021 tax filing and going forward, which kind of stinks. But again, if you don't like the tax rules, write to your congresspeople. Now, there is something you might want to think about if your kids are a little bit younger, or maybe if you have grandkids that are a little bit younger. You can gift money into what we call a 529 college savings plan. When that child takes the money out of that 529 plan, it's tax-free. So the money can grow in there. You take out the money and pay for college. It's fantastic. You can also use savings bonds interest. Interest on Series EE or Series I savings bond issued after 1989 can be tax-free if you use the bond to pay for qualified college tuition and fees. So there's a couple ways here that you can help shift money around to pay for college and help with taxes. So college still is expensive, but there's little breaks here and there. Sticking around, I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy. Bye.